How's it going, everyone? It is the investing guy here, and let's take a quick look at the portfolio. I know it's been a while since I've made a video, but I promise you that there is a good reason why. Just trying to come up with different ways to make more money, to take full advantage of that huge drop that we saw in the stock market. And it worked, because last time that I made a video was about 3 months ago, and my portfolio was valued at about $33,000. In that 3 months, we were able to add about maybe like $6,000, which a lot came from side hustles and just me working extra and doing things like that. Which was why I couldn't make videos. I was just working a lot of the time. So I'm taking it easy again, and the portfolio is doing really well. We see that the portfolio is up almost $2,000, and hopefully your guys' portfolio is also enjoying some gains. Today for you guys, I have a video where I'm going to share 4 dividend stocks with you guys. I actually had 6. After doing some further research, I crossed off 2 stocks, which were Blackstone. I didn't really like it, so I'm not going to make a video about it. And also West Pharmaceutical. I didn't like that one either, which is why it is not part of this video. Before I get into the 4 stocks, I do want to tell you guys what the prerequisites were for these stocks. First off, they need to have a positive dividend yield. The second thing was that they had to be profitable companies from the past 5 years. Third, they did need to be mid-cap stocks or higher. That means that they need to have a market cap of $2 billion or more. And lastly, I did want them to be trading below their 200-day moving average. And the first one that we have here is Tyson Foods, ticker symbol TSN, and it does have a dividend yield of 2.83. If we look at the price here, we do see that it is trading far below its 200-day moving average, which does tell me that it should be within who knows when, but I do expect this to go back up somewhere and try to touch that 200-day moving average sometime soon. So I will keep an eye on this. If I ever see it get near that 200-day moving average, then that's when I will begin thinking about selling my position in Tyson Foods, because this is not one of those stocks that is crucial for my portfolio, but it is one of those stocks that I want to have for maybe a year or 2 years. We do see that the annual growth here for Tyson Foods has been, it's been growing every single year. Not even COVID was able to stop it. It just continues growing and growing every single year. Now, this is probably the only negative that I saw with Tyson Foods, was that they were growing their dividend quite quickly. As of recent times, they've been growing their dividend very, very slowly. You see that over here, they had a 2.5 cent increase, and over here they had a 1.5 cent increase. Then they went back to a 2 cent increase, but the increases have been very, very minimal. So hopefully they can get back to the faster growth like they did back over here with a 7.5 cent increase. Now, one of the reasons why I picked Tyson Foods was, well, if we look here, let's look at the PE ratio that some of the other consumer staples are trading at. We see McCormick trading at 32.3% PE ratio. Then we have Conagra Brands at 28, Hormel at 25, Kellogg's at 16, and then Tyson at 7.2. So I do think there is quite a bit of room for Tyson to grow and get back up to at least a maybe 14, 13 PE ratio, somewhere around there. And well, that means that the price will increase a lot faster than its competitors, which is why I am eyeing Tyson Foods. A stock in the tech industry, and I'm sure everyone here is familiar with it. We're going to talk about Apple. Apple's currently trading at $133.15, and it is quite under its 200-day moving average. The 200-day moving average is at about $150 right now, and Apple is at about $133, so it does tell me that it's a little bit undervalued. Now, when we look at the annual net income for Apple, I see something amazing where it just keeps going up. Other than this year here, I think it was probably because of COVID, but it just keeps going up and up every single year. Now, there is a lot of fear, with them in new infrastructure in India and all that. It is going to cost quite a bit. So that's probably some of the reason why Apple has dropped down. But I think in the long run, I don't think it's going to be something that really keeps Apple from being a highly profitable company. The only thing that I didn't really like about Apple was that they don't really prioritize their dividend. We do see here that they've been growing it year after year, but the increases are very, very minimal. If we were looking at Tyson, and I was saying that Tyson were small jumps, well, Apple is really doing the minimum when it comes to their dividend. They're hardly adding anything into their dividend. But when you buy Apple, you're not really buying it for the dividend. You're buying it more for that long-term growth. and well, that dividend is just a plus. If we look at the analyst price targets, they are predicting that a year from now, Apple should be somewhere around the $170 range, which does give Apple a 27% upside. So I don't know about you guys, but 27% for 1 year sounds like a great deal for me, especially after the year that we've had in 2022. Now, AbbVie, I did have to cheat a little because it's not technically under the 200-day moving average, but it's getting very, very near the 200-day moving average. I have been purchasing AbbVie on the way down here and just averaging down. I am getting ready. If it does drop under that 200-day moving average, I am going to get ready to make a sizable position on AbbVie. We do see that it hardly ever moves under the 200-day moving average. So whenever it does, well, to me, that's a sign of a buying opportunity. AbbVie does have a huge ratio of 3.89%. That is going to help out any downturn in the share price. And if we look at the annual reports here, the revenue just keeps growing year after year. So that is something that, like I said, something that we want to see in pretty much every company that we're adding into our portfolio. We don't want to hurt ourselves by trying to catch any of those falling knives, especially companies not only that are falling knives, but are also doing negative with revenue and net income. Now, one of my favorite things with AbbVie is their dividend growth. In 2018, they were paying 71 cents a quarter. And if we look now, they're paying $1.41, which is almost double what they were paying 5 years ago. So AbbVie is an absolute beast when it comes to dividend growth. This is one of those stocks that you want to buy and hold for a very, very long time. If I buy AbbVie, I'm not thinking of selling. It's not like Tyson Foods where I'm thinking, if it reaches a certain price, I'm going to sell. No, with AbbVie, it's one of those stocks that I'm going to buy and I'm going to keep for a very, very long time. The 1 year price target for AbbVie is about $161, so only about 6% in a year. Now, that's what the analysts have said, but if we look at the valuation, we do see that its fair value is about $356, which this here would say it's 57% undervalued. I think that's a little bit exaggerated, but I do currently think that AbbVie is undervalued. The fourth and last stock, let's talk about Ally Financial. So Ally is far below its 200-day moving average, which is at about $32, $33 around there. And Ally is currently trading at $27.24. Now, I've been buying Ally all the way down since down here, and I was able to average down from about $30 to about $27 where it's at right now. Ally does have a nice dividend yield of 4.44%. And if we look at its financials annually, it's been growing year after year. Revenue has been, growing, and it grew quite a bit in 2021. We know that there was a lot of people purchasing new cars in 2021, and Ally is a huge player in the automotive, which is one of the reasons why it's down so much, because that was a good thing in 2022. A lot of people are saying that it's going to be a bad thing in 2023 when people can't pay those loans that they signed up for. And I really do like the dividend growth here from Ally. If we look at the dividend growth, in 2018, they were paying 13 cents per share every single quarter, and they've been growing it nicely every single year. And now they're paying more than double that at 30 cents every single share. Now they are due for an increase in February, I believe. So we're going to see how much they increase it. They are struggling. As a shareholder, I am hoping for at least a 1 cent increase. What I don't want to see here is a dividend cut, or if they keep it the same. I definitely want to see a dividend increase. So at least a 1 cent increase would definitely increase my confidence in owning more Ally stock. And let's look at this here. The dividend is great. It gets 4 out of 6 check marks from Simply Wall Street. The value is at a great place, and so is the financial health. They only have about a 19% payout ratio, so they have more than enough financially to cover that dividend and to continue it growing. Now, where it is going to struggle is going to be here in the future growth, where instead of growing, they are projected to have negative performances in the upcoming years. So that's one thing to keep in mind if you are looking into Ally. Just remember that they are forecasted to have a tough time. So again, for me, buying Ally here is going to be a very, very long hold. I'm thinking, minimum 4 to 5 years. So I'm not looking to sell Ally anytime soon. That was it for this video. I hope you guys enjoyed it. If you do want to support the channel, I do have some links down below. I highly suggest that you check out SoFi. If you check out SoFi, open up a bank account with them. Their savings account right now is paying 3.7% interest on having your money just sitting there. So I highly recommend SoFi, and if you sign up with my link down below, you will get $50 for signing up. I also have a Robinhood link down below, so if you want to sign up for Robinhood, go ahead and use that link, and you will be helping out this channel, and I would highly appreciate that. All right, guys, I'll catch you guys on the next one.